All right, so we're recording. I'm going to go ahead and get started and just do a brief intro here. It looks like we have 31 people. That's fantastic. We're pleased you could join us. Obviously, we'd rather be where I am. As you can see, I'm in our regular bar. I wish we could all be together. We recognize this is a tough time for everybody, and we're all just trying to figure out how to deal with all this. But you know, the core coin group, we thought it was important to still try to get some information out there. You know, our mission is education and networking, and if this is the only way we can educate and network, then that's what we're going to do. You know, it's a real sense of community in the coin group, and I know that we're all going to be here for each other as much as we can be. So the one thing I would like to say is if you're on the Facebook page, you know, I think this might be a good time to really use it. If you learn something from your tenants or from a flip you're doing or something that has to do with the situation we're in, man, that'd be a great thing to share. Or if you have a question, you know, I don't know if Peter's on here, but it was nice that Peter Lohman was posting some stuff about property management. You know, I think it'd be interesting to hear starting tomorrow if people are getting paid, you know, if their tenants are paying or not, and just to communicate some of that. So if you guys want to share some information on the Facebook, I think that would be really helpful. Other than that, this is going to be recorded, so you probably won't watch it if you're on it, but if not, I'm going to post the recording and we can watch that. And if this goes well, you know, I think we'll probably do another one of these, because it's going to be, you know, obviously the April meeting is canceled and likely our May meeting. So we're going to do our best to do some virtual stuff. So what I'd like to ask now is if you are not Mark or Michael, if you could go ahead and mute, because a lot of times if someone's walking by, they're going to, you know, we're going to hear you, and that just kind of gets in the way. There's going to be some awkward pauses and things like that. So we'll just have to get used to it. We're going to start out with Michael, and he's going to talk about evictions, how Franklin County is dealing with it, maybe the state of current cases and what's going to happen with new cases. And then we'll go to Mark. And I guess if there's any questions after Michael, we'll open it up for a couple of minutes for questions. And then we'll go to Mark, and Mark is going to talk mortgages, loans, Fed interest rates, and forbearance. We're going to try to keep this meeting to about an hour, but it's going to depend on how many questions people have. So with that, I'm going to mute, and I'm going to turn it over to Michael. Thank you, Michael.
All right, thank you. Okay, I got a question about one of the other outlying counties. So I did a little research into what each county around Columbus is doing, and I'll try to get to each of those. And this isn't going to take long because right now we're not doing anything. Franklin County, at least until May 18th, will not have eviction hearings. So if you have a hearing that you need scheduled, you can file right now by mail and include the check for the filing fee. And it's going to be filed, there's going to be set for hearing 8 weeks from the day that they receive it. But that doesn't mean it's actually going to be heard 8 weeks from the day that they receive it, and I'll get to that here at the end. If you have a damages hearing, if you're filing a 2-cause instead of a 1-cause action, your damages hearing will be set for 2 weeks after your hearing for restitution of the premises. If you have right now a case that you have gone through and you have gotten the red tag notice and everything, but you haven't gotten possession back yet, you're not going to be getting possession back until at least May 18th. Everything is on hold until then. I have a client who had an agreement with a tenant that they'd move out today, and we could get the red tag, or we could get the immediate set out if they didn't. Well, if they don't, we can't do anything about it now until at least the 18th of May. If you have a writ that you've had issued that hasn't been enforced yet, once things have started back up again, you can go to the duty judge and get that reissued. All right, they say that they'll do that on a case-by-case basis. I can't imagine that those are going to get denied for any reason. In Delaware County, they say no eviction hearings until April 20th. They're assigning new dates to any case that were currently in process. So you can go to their clerk's website to figure out what your new date is if you have one pending there. If you have any filing to do, you can file via fax, or you can mail if you need to mail a check in to pay for your eviction filing there. Union County has no orders available that I can find. That doesn't mean that they are operating business as usual. It just means that whatever they're doing, they have not posted. In Fairfield County, the court can modify their procedures as needed, and they are considering this to be a good cause to give just blanket continuances to any case that's before them right now. And in Madison County, there's nothing but criminal cases right now in Madison County. So if you have an eviction that you need to do there, you're not going to get one done until the court orders that they've resumed doing civil filings there. All right, so the big picture of this whole thing, and with my opinion, this is my opinion now at this point. We're not going to get anything started until at least June, as far as hearings go in eviction cases in Franklin County. If you've ever been to the Franklin County Eviction Court, that is a large public gathering, right? People are shoulder to shoulder in there. It's the exact kind of thing that they don't want to see happen. Once they do start back up in June, I have no idea how they plan on solving the backlog of cases that they're going to have. Because the court's also ordered that they're not going to hear more than 100 cases in a day. And they already hear almost 100 cases every day as it is. So for the foreseeable future, if you have an eviction in Franklin County, you can count on that process not taking 1 month like it typically did before, but taking 2, 3, 4 months to resolve itself. And what that means for you as a property owner would be if you have a tenant who can't pay their rent, but is going to get unemployment benefits soon, now would be a good time to go back to the bargaining table with them and maybe negotiate some sort of rent reduction. Figure out a way that you can work with your tenants to keep them paying you anything. Because if they stop paying you, if you serve that 3-day notice for non-payment and they stop paying you, they're going to be there for a long time before you can do anything about it, and they're not going to pay you a dime. All right, any questions?
All right. Well, thank you, Michael. Is that all you have?
That's it. If anyone has any questions, I'd be happy to take them.
Okay.
Hey, Mike, I have one question for you.
Sure.
I've got I bought a property that was subject to a lawsuit that was related to city code violations.
Yes.
So these were, in play before I bought the property. I bought the property, it was distressed. Any idea what's going to happen on timing on those? I know everything's been pushed, but you think it's about the same thing? You're looking at 2-3 month push out on those hearings?
I think you're probably still looking at a 2-3 month push out on those hearings. What I would recommend you trying to do in that case, with an active case that's currently going through the process, is get a hold of the prosecutor on the case. They're all essential. They should still be working. I don't know if they're working from home or working from the office, but if you can get a hold of the prosecutor, maybe figure out what you need to get done before you have your hearing date coming up, so that you can get that process solved as quickly as you can.
And this is me speaking as a layperson. So
Could everybody mute, please, if you're not speaking? We can hear a couple of people talking in the background there. That would be great. Thank you. Any other questions for Michael? No? Okay. Mark, I think we'll go ahead to you. And again, if you're not talking, please mute. Thank you.
Yeah, if you're not sure where the mute button is, just kind of throw your little mouse on your picture screen, and it's in the bottom left-hand side, and you just have to click mute, and you'll be all set. All right, so piggybacking on what Michael kind of went over, the key thing here is to be proactive and talking with your tenants. So right now I'm talking about the investors out there who have properties and they have tenants and they're concerned about getting paid. And you might not have gotten paid this month, okay? Some people probably were maybe a little scared, held off, I don't know. But now they're in a situation where they're not gonna pay. Now, we just got some stimulus information. I know they're all supposed to start receiving monies coming, what is it, mid-April or something like that. So keep our fingers crossed that happens. Problem is, are you going to get your hands on that money or part of that money or something else like that? Because unemployment money is not getting processed in terms of through jobs and family services. And you have all these different issues kind of going on with it. So you want to consider what are your options moving forward. And I agree with Michael 100%. Be proactive and start talking to your tenants. Something is better than nothing here. All right. Now, let's talk about, and I'll couple this here, what I just talked about with this next part. The next part is, what if you have been laid off, and we're talking about your primary home. What if you've been laid off and you can't make your payment on your mortgage, or you know somebody in that situation, or maybe you have been laid off as a result of coronavirus, but you have the opportunity to still pay it, but you prefer not to, okay? Well, guess what? You can contact your current servicer for the most part and probably find an option for you, all right? So I'm gonna go through some of the different loan programs that are out there. Hey, Jim, should I be on the big picture here? I got DERF Apocalypse on my screen.
I think you're okay. You still look the same to me. That might be something on your computer.
All right, that's fine. No problem with me. I'll just look at DERF
Coming
Apocalypse.
through good to me,
Yeah,
Mark.
I saw you on the big picture as well.
Yeah, we hear you.
Okay.
So if
All
you
right.
go, hey, Mark, if you go to the top, there's a speaker view, and I think you can change it to gallery view or something like
Oh.
that, and then it will change.
Oh, good deal. Oh,
Top
there we
right
go.
corner.
Got it. All right. So moving forward, so let's talk about some of the different loan programs and the options that are available in terms of I'm having problems making my payment or concerned about making my payment because I don't have the money coming in and I got to pay other bills. All right. So you talk about your other bills or your car loan, your credit cards, student loans, your utility bills. You got to keep all those things going. All right. Now, during the last recession, we had a whole bunch of foreclosures. We don't want to see those things happen. So most people have a conventional loan, Fannie Mae or Freddie Mac type of loan. Fannie Mae and Freddie Mac both came out and said, if you are unable to make your payment because you have been furloughed or laid off as a result of coronavirus, what you can do is contact your loan servicer, let them know that, and then there is a simple process, supposedly, you know, and there's no documentation. It is, hey, I've been laid off, so there's no documentation to this. And you should be able to set up what's called a forbearance plan. Now, it's not a forgiveness plan. It's not truly a deferment. We'll talk about deferment here in a second. A forbearance plan says, hey, let's say I set up a no payment on my mortgage for the next 4 months. That means when that forbearance term is over, then they're probably going to renegotiate those 4 months that you missed and spread it out over the next 12 months. Very similar to when you go through what's called an escrow analysis and you see your taxes went up and they spread out that shortage over 12 months. That's what that forbearance plan is going to work like. Now, no one knows how long this whole coronavirus world is going to last. Is it going to be a 1 month, 2 months, 4 months, 12 months? We don't know yet. Okay. So at the end of whatever term you set up, you may have to renegotiate something else to work out because maybe you can't afford the new payment spread out over 12 months. Maybe you need to spread it out over 24 months. They don't know the answers to everything, so they're leaving that a little bit up in the air. But you have the opportunity, if you have a loan payment, and this is good not just for you, but you need to share this with everybody you know so they know how to go do this. But you need to call your servicer and find out what options are available. That's for Fannie and Freddie's. That's what they're doing. All right. Now, the drawback is going to take a long time on the phone getting through to them, but you just have to sit on the phone. So let's talk about government loans, FHA, VA, USDA. They always have had this plan in place. It's part of their normal loan programs that they have. So again, for those types of loan programs, all you need to do is contact your loan servicer, okay? So that's always in place. What if you have a portfolio loan or commercial loans? Because some of you guys out there maybe work directly with the bank, and those portfolio commercial loans, basically that is the bank lending their own money, the depositor's money. Now, in those situations, it's dependent on whether or not the bank will do something with you, all right? And some of the banks have already come out. For example, I know First Financial Bank, they do some business here in town. They're more of a regional sized bank, and they are doing a true deferment. A true deferment means that they are delaying they're going to not make you pay any payment, and they're going to take those payments and put them on the back end. So like my son has a loan with First Financial Bank. I happen to co-sign that with him. He was laid off, and he can defer his payment on that loan for 3 months. And after 3 months, he's just going to start up doing loans again, or doing his loan payment again. He's not going to have to make it up. So that's a true deferment. So that's a little bit different. Does not matter what loan you really have. What you first must start with is calling your loan servicer. Now, let's talk about investors. Okay, so I have rental properties. Many of you have rental properties. What if your tenant was laid off or furloughed, whatever way you want to call it, and can't make payments to you as the owner of the property, and thus you may not be able to make the mortgage payment on your loan because you're not receiving the tenant's income? With Fannie Mae and Freddie Mac, that's an acceptable reason to do the forbearance plan. Now, if you have, chances are you don't have an FHA, VA, or a USDA loan if you're a rental property owner. Okay, but most of your loans are going to be Fannie Mae or Freddie Mac for those out there. So again, contact your loan servicer in terms of finding out what options are available. Okay, that's really important. Now, how to play this back with what Michael was talking about, be proactive with your customer. If your customer isn't familiar with all this information, and they may just say, screw it, I'm not going to pay you. I'm not going to pay for the next 4 months. I know they're not default. They're not doing any evictions and stuff like that. I'm going to take advantage of this. Be ahead of this game. Say, hey, how are you doing? Let's set up something to make this work. Okay. Be sincere. Find a way to get something and make it good for them and have them working together, and that's going to be a better relationship. And then you don't get in this situation, because I guarantee you what Michael has said, it's going to take months for them to really catch up. And you just don't want to be there. You won't be there in that situation, because then you have water bills running up that you got to pay at the end and everything else. So any questions that anybody has regarding what some of your options are, if either you have problems making your payment or concerned about making your payment, or some friends or family, or if your tenants can't pay you, and what your options are. I don't see anything on the chats. Okay. Some other things I wanted to talk about, because I'm just going to throw them out if nobody has anything else out there. Mortgage rate.
Hey, Mark,
Yes.
can you pause just one second?
Yep.
Just because I think it takes a second for someone to ask a question if they're not doing the chat. So does anyone have a question about what Mark just spoke about? Okay, I just want to give pause in case they did. So go ahead, Mark. Thank you.
No problem.
Sorry, actually, I do have a question if I can jump in real quick.
Yes, go.
So the question I have is there something that you guys have put together that we can send to our tenants that kind of gives them a little bit of a centralized checklist of things they can do on their own, like all the assistance, like all the government assistance that's been offered up? Maybe like a real quick cheat sheet for them to, make sure you do unemployment and make sure, you do this and do that. I was thinking about compiling that, but has anybody else done that? And if so, can that be shared, or what do you guys think about that?
That's actually a great idea, Tom, because I was actually just looking on, checking something on television the other day regarding some of the different other options other than just the unemployment. There were a couple other plans out there, and I have not compiled anything. I know we haven't put anything together, but really good
Mark?
point. And if anybody has that or has put that together or looking to, please share it with everybody. Also share any insight. For example, I know that, if you try to go into Ohio Jobs and Family Services to try to collect unemployment right now, they are overwhelmed. I know they have put in a ton of new servers, but I know they're having tons of problems, because my son has tried to apply and he still hasn't seen anything from it. I know people have been having tons of issues with that. So, but sometimes it's just knowing what's there. And if we're, as the rental owner or the landlord, if we're working with our tenants understanding these concerns and issues and say, yeah, we know you've done the right thing. We're working with you. We'll get there together. I think that might be good. But if anybody has all this information compiled, please share. Amazing information to have.
Hey, Mark, I actually, our initial first ever coin guest, Nate Bush, he's my accountant, tax accountant. He's been sending out some emails, and it's not something that I really want to send out to 500 people through the coin list. But it is there's 2 emails, and one of them included everything that businesses and private individuals could get from the government through the CARE Act. And he also put a spreadsheet together. So if anyone on this call would like that, just send me an email. Everyone should have my email address through the emails I send out. Send me an email and I'll forward that. It's not something, like he said, it was fine to share with people, but I just don't really feel comfortable sharing it to a mailing list of 500. But Tom, if you want to send me an email, remind me, and anyone else on this call, I would happily share that because it's got some really good information, not just for us, but for also, small business owners and things like that.
Yeah, that sounds great. I appreciate it. Thanks.
See a chat question here on the chat regarding an SBA disaster loan application and getting some forgiveness of $10,000. I don't do SBA loans, so I can't really talk, intelligently about this. But again, I would say if you have an SBA loan, anytime you have a loan and you have a question about what options, call your loan servicer. That is where you start first, okay? And just know that when you do call, guess what? Everybody is calling them. So get ready to wait on the phone, be patient, find some, put it on the side, sit down, watch some television, find something else to do. It is a long, drawn out process, but that's okay. Just be prepared for that. See anything else? Are there any cons to utilizing the forgiveness plans? Good question. Hit to credit. No, I forgot to mention that. There is absolute 0 hit to your credit for those forbearance plans. That is very, very good question. Things to consider and the possible cons is how is that payment going to go up afterwards? For example, let's say your normal payment is $1,200 and you have a forgiveness plan of 6 months. Well, then that would be $7,200, and then $7,200 over the next 12 months would be an extra $600. So then the next 12 months, your payment would be $1,800 rather than the $1,200. Now, you may be able to make that extra amount over a longer period of time, but because they haven't really settled on what the payment plan is going to be at the end. So that is a little bit of concern there. I have a couple smaller loans that I could do some deferments or something like that. I'm going to not for now because I think I can weather the storm without it for now, but I can maybe change my mind later if I want. But I'm going to not do it for myself so that way I don't have that increased payment later. Okay, and I'm going to try to work with my customers up front and try to be ahead of the game a little bit and maybe only be lagging behind maybe a month or 2 while I hopefully get involved with them while they get their direct payments from the government on this $1,200 and everything else. Okay. If anybody has some more questions about anything that comes, just keep sending them in the chat. I did want to talk to if people are doing any refinance, or let's just talk lending in general. Who's out there still lending money? Because there has been a huge amount of flux in the industry. Most of your what we call non-qualified mortgage companies. So a lot of the investor companies that like Fund That Flip suspended loans or lending. I don't know if that just happened this last week. All the other subprime, non-prime, most of the jumbo, all that kind of lending that is usually backed by hedge fund companies are out. They're completely out right now. There are still some that are managing, But most of them have suspended all business because of all the craziness going on. Even the normal traditional loans, your FHA, Fannie Mae, Freddie Mac, you know, VA and all that stuff, those are changing as well too. Mostly on the government. A lot of people are trying to do any government loans. You better have higher credit scores because no one wants to purchase those government loans because what they're concerned with is those usually have lower credit scores and tend to have a higher default ratio, and nobody wants to be involved in those right now. Now, Fannie Mae and Freddie Mac are still doing the kind of things they normally do, but there's a lot of issues with the mortgage way those mortgage-backed securities are being traded at the end. And what I'm, you know, mortgage-backed securities, a lot of people aren't familiar with what that is, but when I put together a loan, that's a Fannie Mae loan, that means I'm going to take that loan and deliver it to Fannie Mae and they're going to give me my money back. And then plus they give me a little bit extra. That's how I make money, okay? But what does Fannie Mae do with that loan? They take that and put it into what's called a securitized pool, and then they get people to invest in those securitized pools. A couple of weeks ago, we had the Federal Reserve came out and said that they're going to help buy mortgage-backed securities, which was a huge, you know, boost to us because a lot of people weren't buying mortgage-backed securities because a lot of people were selling their stocks and everything else like that. So it was really a bad time. But that market is still up and down, up and down, up and down every single day. And one of the ones that no one wants to buy, by the way, is investor loans. Investor loans historically during every recession have the highest default ratio. That is just a fact. Why? Because you're going to let the rental property go before you let your primary home go. All right. So that's why Fannie Mae and Freddie Mac put it in that rule or their guidance regarding, hey, we can put in a forbearance plan. We don't want to foreclose on you. They don't want to. All right. So call them and take care of that stuff. But guess what? The securitized pools for investors are not being purchased. So right now, rates are still very low. They're in the 3s, but they go up and down a lot every day for owner-occupied people. But for your investor loans, they're way up a lot higher. You got to start paying a lot of points to get a decent rate right now. All my cash out refinances and, you know, rate and term refinances on investment loans, I mean, they're into the 5s. They're not in the right spot, but it's all because of where the investor market is being purchased in the mortgage-backed securities market. All right. Right now, the rates are ranging anywhere from 3% to 4.5% over the last 30 days. So we started off the month with the best rates we've ever had. We had 3% for 30-year fixed buyers of homes putting 20% down. So that was your typical purchase on the first 7 business days of the month. Well, then what happened is every lender like myself were doing a ton of refinances, and we booked more loans than we ever had in a 10-day period by way more, and this is industry-wide. And then we ran into a problem, we had too many loans, and then we had to artificially inflate rates. But then we had the problem that I just spoke of with mortgage-backed securities, people weren't buying them. And then all of a sudden, within 3 days, my 3% rate was 4.5%. It was absolutely insane. And then we started having the Fed come out. The Fed came out and said, hey, we're going to lower the prime rate, which, by the way, everybody, when the Fed lowers the prime rate, that does not mean mortgage rates go down. In fact, him lowering the prime rate did nothing in terms of mortgage rates. That does help your home equity lines of credit. I mean, if you have a home equity line of credit, your rate just went down. Okay. So that's good news. But what the Fed really did help was when he said he was going to buy mortgage-backed securities. So then we saw the rates go back down, but then mortgage-backed securities were trading really bad by the end of the week and they went back up. Just yesterday morning, I started at 3.125. So we're doing this roller coaster up and down, huge amounts. 3.125 was my rate for a 20% down payment, 740 credit score borrower buying a primary home. As of right now, I'm at 3.75. So in a matter of less than 2 days, the rates have gone up and down this much. It is absolutely crazy. So if you're doing anything with your loans right now, refinances, it's okay. Just get in the process. Just know that you're going to go up and down and you want to be able to lock on that down part. Okay. We're not going to see any consistency probably for a while because we just don't know what's going on in the world in general. You have a world pandemic, you have a world economy, and they all are interacting in ways we just don't even know how to interpret. We don't know what the recession is going to look like at the end of this. And yes, there's going to be a recession. We don't know how long it's going to last and how long it's going to, how it's going to really affect us. Okay. These are all questions that are affecting mortgage rates, not just daily, but by the hour. Okay. Let's look at some questions. What are you seeing on the HELOC market for lenders drawing back credit lines or clawing them back? I haven't seen that, but that did happen during the last recession. Usually when that starts happening is when they start seeing home values go down. So during the last recession, when home values were dropping, that's when they started clawing back the credit lines in terms of your availability. I have not seen that because we haven't seen prices go down. Prices are still very strong and very attractive. People are still going out and buying homes right now. There are less homes on the market, and there's probably some less buyers, but most people are still making multiple offers on most good homes. I will say this though, regarding HELOCs, most of the banks have increased the margins. So like your rate is determined on the prime rate, which is 0, and the margin. And usually the margin, used to have 80% loan to value was like prime plus 0. No one's doing that. You're not getting 0% interest rate, but people are probably doing prime plus 1, prime plus 2. And every bank's doing them differently right now. And some of them are artificially inflating their rate on that to discourage business because they got too much. I talked to someone the other day from and Citizens is doing prime plus 7. And it's just because they're saying, we don't want any more business. We've had too many calls. Are there any cons to utilize? No, we talked about that one. Any concerns about lenders call loans when you have quit claim them deed into your LLC name instead of your personal name? Okay, so let's kind of cover that a little bit. If your loan is with Fannie Mae, that's not a problem. Absolutely, it's not a problem. Fannie Mae allows you to put it into your LLC as long as you are a member of that LLC. That used to be an issue, but no longer with Fannie Mae loans. If your loan's a Freddie Mac loan, then technically that's a problem. However, I've only heard of one person ever getting called on that. And typically the only time you get called on that is when you stop making payments. Because that's what's that called is an acceleration. When you change the title, when you're not allowed to change the title, it's called an acceleration clause. The lender's allowed to accelerate the loan and call it due. But typically that is in there for when you stop making payments, they'll check out the title and that helps fast track the foreclosure process. By the way, nobody wants to foreclose on any home right now. That is going to be a disaster. We all know what happened in the last recession, and every lender out there wants to avoid that 100%. Are you seeing lower LTVs offered for refinancing and higher requirements for reserves, or terms are still relatively competitive? Okay, so what I have seen is no change at all to LTVs offered. All the LTVs offered that I had before, I still have. Fannie Mae and Freddie Mac has not changed those one bit. No additional requirement for reserves. Those guidelines are still the same. The only thing I have seen is on government loans, and this just happened to me today, it started happening to other lenders last week, is on our government stuff, we're requiring higher credit scores. So I used to be able to go down to a 580 credit score for a FHA or VA, and now it's going to be 640 for a purchase. So that came up, but those aren't usually affecting anything in the investor world anyway. Other than the rates going up and down all over the place, historically still amazing rates. And I do expect at some time, and now this is an opinion, and opinions aren't worth a lot in the mortgage industry right now because we just don't know what all this is going to come together. But the 10-year treasury, typically whatever the 10-year treasury note is at, mortgage rates should be about 2% over that for a primary purchase. And for quick, easy math, say 3% for investment. The 10-year treasury, I think today was like 0.8. So mortgage rates on a 30-year fix should be like 2.8 to 3%. They're not there because of all these other little things that are affecting rates. If you're buying an investment property, it should be about 3.875 to 4. It's not there because of all the other little things. But I do expect at some time when maybe we do get through all these problems and we start to get past all these COVID-19 issues, and maybe the 10-year treasury is still there and we see things balance out, then yes, I think that we'll see the rates even go low and stay low. Okay. Now that's an opinion of where I think things are going to go. So I always tell everybody I'm as good as a chicken. We're right half the time. What should we do with commercial residential tenants that won't pay rent at this time? This is where you just need to talk to your tenants and try to work out something. Some of us are out there going to have a tenant who is going to take this and use this as an advantage to not pay for the next 4 months. That is just the truth of what's going to happen. There are going to be some tenants of yours who are going to say, I got an opportunity to just live rent-free, collect my $1,200 or however much I'm going to get direct pay, collect any unemployment, and build up their little nest egg of money and do nothing and take advantage of you. That is a true possibility, and some of us are going to have the brunt of that happen to us. Hopefully, though, if you start early talking to your tenants and try to be proactive, I think if you're proactive rather than reactive, you're more likely to have a better outcome with your tenant. But some of us are just going to get screwed. Covered a lot of, and I don't want to take too much. I mean, I could talk forever about stuff, but I really don't want to do that. Does anybody have any other questions, whether it's on the chat or chime in? Please do. Nothing.
Okay. Well, do you have anything else to add, Mark?
You know, everything's changing all the time. I mean, everything we do in our lives is changed because of, the coronavirus. Appraisers right now are doing exterior only appraisals. We're doing title. We're trying to do e-closings for title. Courthouses are closed, so everything has to be done online. Everything you're doing in your life, you're probably being affected. Everything's being affected in some way. We're all working from home if you're working. So if you have a question or whatever that just kind of pops up, feel free to email me or reach out to other people. We just have to keep sharing information because it's constantly changing. It's constantly changing every day. So the more we communicate, the better we can help each other. I mean, we're a community, so let's keep trying to help each other get through this together as a community, because I think that will help us all in the long run.
One more chat for you there, Mark.
Okay, I have a property listed. Should I drop the price to sell quicker? Well, that's general information. I know people who are still getting multiple offers on the home. So if your home is, there's too much information, it's too little information for me to answer that fully. But I know there are less buyers out there, but then there are lots less people selling. So usually this is a supply and demand thing. So we're still there are a lot more buyers than there are homes. So demand high, supply low, the prices should be always going up. All right. Now, there are some buyers out there think they might be able to get a better deal, but to me, still a better deal is getting it for $10,000 over list rather than $20,000 over list if it's an HGTV perfect house. But if your house is just, not as nice, then you're not going to get as much for that. I don't see homes dropping in value. Again, this is my opinion. I don't see homes dropping in value right now because I got people right before this. I put together a pre-approval for someone for a $425,000 purchase. So I am not stopping qualifying people. A lot of people are actually saying, I think this is the time I can maybe get a little bit better deal. But your situation, I feel free. If you wanted to reach out to me, feel free. But if your house isn't selling, it's not priced right. That's always the answer. And no matter what the market. So if you've been listed and you're not selling, then you probably do need to drop your price because you probably have it too high.
Great. All right, if there, we'll pause here just for a second. If there are any specific questions for Mark on the mortgages, loans, or rental properties, or if there are any specific questions for Michael, we will, we'll have people ask those. And then if you have any general questions that you want to ask, and we can open it up to anybody in the group for answering. So if you have something you want to say, now is the time. I see there's a couple things in the chat, so we'll check those out also.
Thanks for coordinating, Jim.
You're welcome. I'm pleased with all the people that came. Okay, would the speakers be able to share contact information? So Mark and Michael, if you guys want to just type maybe your name and email in the chat here, then people can have access to it. If you know, I'll probably send a follow-up email with the with the recording. I think if we can find a topic and a speaker, I think we should plan to have our April meeting on the third Tuesday of the month. I forget which day of the week that is, but I'll send something out on that. And I think the one thing that Mark said that is true is you know, that we're a community and we need to help each other. No one knows what's going to happen, and if you're talking to someone and they're confident they know what's going to happen in the market, the stock market, or real estate, or how this is going to spread, that's the only person I wouldn't listen to. If you're talking to people who just aren't sure but have some ideas, those are the kinds of people you should talk to. And we have plenty of smart people in this group. We have the coin directory that you can look up and contact people. We have our Facebook page. So let's make sure that we're all working together and helping each other. That's the reason we put this group together. That's the reason we show up once a month to share our experiences with each other. And just because we can't do it face to face, we should still do it by any means we can virtually here. So I would hope everyone will continue to do that. I'll pause here for a second if there's any other questions. Otherwise, thank you so much for showing up to our first ever virtual meeting. And we'll at least do one on the third Tuesday of April, hopefully. And if something comes up and we have some information to share, we might do one before that. So thank you very much. And we'll see if there's any questions. Otherwise, this is the end of the meeting. Thank you very much.
Thanks, guys.
Thank you, everybody.
Thanks a lot.
Thanks, guys.
All right. Looks like we're good. Thank you all. Michael and Mark put their contact information in the chat. So if you want to check that out, go for it. Otherwise, we will see you next time.
Everybody stay well.
Appreciate it, guys.
You too.
Thanks, everyone.